Alright guys, warm welcome to another week ahead video. This week's video will cover the trading week running from Monday the 23rd to Friday the 27th of August 2021. Now, even though we have things like flash PMI data coming up on Monday and US GDP coming up on Thursday, the main event for this week will be that upcoming Jackson Hole symposium, and that means that a lot of focus on the US dollar. Now, the dollar pulled off quite a solid push higher this week after recovering from the prior week's sudden and sharp fall we saw in that University Michigan consumer sentiment. Now, the drive higher this week was partly driven by risk sentiment and partly driven by tapering talk in the Fed's minutes, which created some choppy price action at first for the dollar, but later proved to be more supportive. Now, the main takeaway from the minutes was that even though substantial further progress was still not met, the median view of the FOMC has arguably shifted towards a possible earlier tapering taking place later this year. Now, on the back of the minutes, we did see the dollar managing to grind out a new 2021 high, taking out that prior March highs around that 93.50 psychological level, and we basically finished the week oscillating around that key zone. Now, apart from the Fed minutes, like we said, overall risk sentiment also created a safe haven demand for the greenback this week, and for the majority of the week, we were fixated mostly on a couple of key market proxies, which were all showing some signs of an overall deterioration in the global risk sentiment outlook. Now, the past few sessions, we've seen the market's favorite FX risk proxy, which is, of course, the Aussie yen, continuing to push to the downside. We had Dr. Copper breaking lower and taking out key trend and psychological support. Bond yields have remained stubbornly low. The US dollar pushing up recently alongside the VIX, which has struggled to break lower recently and have been trading very compressed around that post-pandemic lows. Now, the reason for some of this angst has been China, where growth has been slowing, the greater Asia-Pac area, where growth has been slowing, as well as the impact that the virus could have not only on their growth outlook, but also on the global growth outlook. And it's always important to keep the dollar's inverse correlation to global economic growth in mind, because what we normally see happen is when we have good global growth prospects, that's usually bad for the US dollar. When we have bad global growth prospects, that's usually positive for the US dollar. And that relationship can be seen here by looking at that inverse correlation between the US dollar seen in blue, as well as the Citi Global Economic Surprise Index, which has been trending lower by quite some margin in the last couple of weeks. Now, going into this week's upcoming event then, the main event, that Jackson Hole symposium. The symposium has been touted as a possible opportunity for the Federal Reserve to give an unofficial hint of an official tapering decision, possibly coming up in September, as the symposium have in previous years being used to signal major policy changes. Now, going into the event, we've had a growing group of Fed speak hinting that tapering could potentially happen later this year, with the Fed minutes of that July meeting confirming that sentiment shift. Now, until this week, the real concern for markets arguably haven't really been the exact starting date for that eventual tapering, but rather what pace that tapering will have, with some of the more hawkish members saying that they want tapering to conclude as soon as possible, and of course the dovish members pushing back against that more aggressive move. Now, the COVID resurgence has brought to light a new dynamic, because on Friday we had Fed's Kaplan, who has been, very vocal about his hawkish views for tapering. We had him coming out saying some pretty dovish comments about the virus on Friday. He said that even though the resurgence hasn't affected mobility, it is currently already affecting production output. And if it has a more negative effect on the overall growth outlook, it could cause an adjustment of views among the FOMC. And even though he is just one member, he has been one of the more vocal hawks recently. So that was pretty dovish comments coming out from him. And, even though the Fed was, of course, surprisingly sanguine about the virus risks in their July meeting, the resurgence has evolved quite a bit from then. If we take a look at this chart on the left-hand side, here we can see that going back to that very hawkish meeting we had back in June on the 16th, around about that time, we can see that the 7-day average rolling number per day of new cases in the US was sitting around 12,000. Now, that shot up to 64,000 per day at the July meeting, and right now going into Jackson Hole, we're sitting at 140 or close to 140,000 per day. So we've seen a drastic escalation in that virus situation. Unlike what we saw in the UK's resurgence, sadly the US isn't really holding up as well when it comes to the fatalities. Remember when we had that big spike to the upside in case numbers, very similar to this in the UK, we saw that the fatality rate was very, very low. Now, what we're seeing in the US isn't really the same picture. That's actually been accelerating quite a bit to the upside. So that is something for the Fed members to be worried about. And, you know, the idea of seeing liquidity being withdrawn while the current resurgence is ramping up and, you know, signs that that above trend growth is moderating, you know, that might be enough for the Fed to take a step back saying that, hey, you know what? We have time to be patient. Let's just maybe see how this plays out before we make any major decisions. So that's definitely something key to watch going into this week's symposium. Now, in terms of a trade plan, it's going to be very, very simple. In terms of the hawkish outcomes, if Fed Chair Powell provides any unofficial hint of a tapering decision possibly taking place in September, that is expected to be positive for yields, positive for the dollar, bad for gold, bad for equities. Anything that suggests that the tapering pace will be quicker than the currently expected 10 billion for bonds or treasuries and 5 billion for MBS will also be seen as a hawkish tilt. And then any type of downplaying from them, downplaying the current fears about slowing growth as well as the virus, that'll also be seen as a more hawkish tilt from him. And in terms of the dovish outcomes, you know, if he gives no unofficial hint of tapering of a decision taking place in September, that should arguably see more downside because we have seen some growing expectations that, you know, Jackson Hole will be the event where we get that unofficial nod. So if that doesn't happen, arguably we could see some downside playing out. Anything that suggests that the pace will basically be in line with the current expectations of around 10 billion in treasuries and 5 billion in mortgage-backed securities, that'll be seen as more as a dovish one, because right now the markets are hoping at least for a possible quicker tapering. So that is something to watch on the dovish front. And then obviously if they express real material concerns right now about slowing growth as well as the virus situation, that is also expected to see more downside. And as always, obviously keeping a very, very close eye on overall pre-positioning going into the event. That'll be very important to see how the markets might be positioning themselves in terms of what they expect from Fed Chair Powell before the event. And that can obviously sometimes lead to a buy the rumor, sell the fact reaction. So pre-positioning will be very important for the dollar, for yields, for gold and equities going into that event. So guys, that's everything from our side. Hope you guys will have a fantastic week ahead. Good luck trading that event. As always, any questions, please don't hesitate to let us know.